Some of you may really want to buy a house, but interest rates are putting a damper on your plans. So I want to share with you a few creative strategies that may help you get a lower interest rate in order to get that house. Sometimes we just have to think outside of the box to get the things we want. When financing a home, the most common method is applying for a mortgage loan through an institution that supplies such loans like banks and mortgage financing companies. But there are other ways to buy a house. One way is to look for new home builders who are anxious to get rid of their inventory. I receive a ton of emails from new builders who offer lower interest rates to sell their quick move-in homes. Keep in mind there may be some restrictions like using their preferred lender, having a particular credit score, or the lower interest rate offer can only be used for conventional loans with 20% down. Another creative strategy to beat interest rates is seller financing, which is when the seller finances the deal instead of a typical financial institution. The down payment requirement varies seller to seller, but based on my experience, most sellers want at least 20% down. The interest rate offered by sellers will vary too, but it may be negotiable, which is the great thing about it, unlike interest rates offered by a typical lender. Another fact to note on seller financing is most sellers want a balloon payment within a set time period. For example, a seller offers seller financing on his or her property with a purchase price of $300,000 at 6% interest, amortized over 30 years with a balloon payment in 5 years and a 20% down payment. The balloon payment means the seller wants the balance paid in 5 years. This can be accomplished through a refinance unless you can pay the balance in cash. Assuming a mortgage is also an alternative method to buying a home. When you assume a mortgage, you are taking over the existing mortgage, which includes that mortgage interest rate. Now, the goal of using this type of creative financing is to assume a mortgage with a lower rate than the current market rate. One caveat of assuming a mortgage is the due on sale clause that may exist on a loan. A lender can demand the loan or the balance of the loan due when the house is sold, so do your homework if you plan to assume a mortgage. I'm Renee the Realtor. As always, thanks for tuning in, and we will see you in the next video.